Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Happy New Year, everybody. Checking in on the dollar, gold, and miners. So the dollar had a big bull move, and it was the highest price we've seen in 13 years. The bulls are still in full control, but it was a clear bearish reversal inverted hammer, which was confirmed and led to downside. Now we're forming a lower high, higher low tightening range, and we'll see where that breaks. The low of this consolidation, 103.01, and this resistance line up at 103.60 comes from zooming out. That's the highest close we've seen on the hourly time frame, 103.60. So I put a line there. I rejected the lower high attempt, and even though we hit higher highs, we rejected from that resistance level again. So I'm leaving that line there. Watch to see if the bulls are able to turn that into support. Daily time frame, bulls still very much in control, but look at that clear resistance line at 103.60. Lots of tops there, and this is a very important support on the daily time frame, 101.91. As long as we hold that level, the prevailing long-term uptrend is very much intact. But if we were to be unable to get above 103.60 and close above it, then pull back and break 101.91 support, that would be a clear short-term bear signal. So what we got today with that pullback in the dollar was some strength in gold. We had this downtrend resistance line from our video over the weekend, and we saw a clear bull break. We had a bit of a heads up, and that's where silver comes into play. And it was a much tighter pattern and a much more clear break. So we got the first signal for silver on the 9 a.m. Eastern hourly candlestick. Look at the volume accompanying that breakout. So at 9 a.m., we broke out of this pattern, we broke the lower high pattern, and we knew it was more likely than not that the bulls were going to show up. So that occurred at 9 a.m., and gold's break didn't occur until the 11 a.m. hourly candlestick. So as soon as that silver break occurred, someone in the chat room pointed it out. I affirmed by looking at the chart. I posted this chart in our commodities channel, and I said, heads up on gold. Keep an eye out for a laggard as silver has made the bull break, and we've seen instances before where silver has been a nice heads up for an eventual gold move. So gold bulls showed up, and we consolidated after the bull break, and we formed a long lower wick with the bulls buying the dip. So they're certainly still in control. We're back testing support here at 11.58. That was resistance on this lower high attempt, and now it's acting as support as we have not closed below that level. But what stands out to me is the fact that the bulls, the mining bulls, look at NUGT. This was an ideal day for the mining bulls, and that's because we did not confirm the bearish reversal candlesticks from Friday. So normal healthy consolidation on Friday, bulls resuming the uptrend. Look at the close at the high of the day, and you look at gold, and we didn't close anywhere near the high of the day. We were off by about $5. So that strength was in part due to the market strength. The S&P 500 had a little run up into the end of the day, and today was a day where the market was green and gold was green, which doesn't happen often these days, but whenever we have gold in the market in the same direction, the miners really feel that in whichever direction it does lead to. So here on the weekly time frame, here we are at this exponential resistance, this 8-period exponential resistance, this red line. We have rejected from this 1, 2, 3, 4, 5, 6 times on this downtrend, and here we are again. If we close 860 or better this week, we're going to close above this level for the first time since we started pulling back. We're watching for a bullish MACD cross. We're watching for a bull TCG cross where this 4-period crosses the 8-period to the upside. And we're off to a great start to this week. So we now have a key support to be watching, the low of that consolidation. 755 on NUGT. If we break that level, we know it's a bit of a red flag for the bulls. Middle Bollinger Band leveling out. That's going to begin ascending. Let's check in on JNUG. We know it's been lagging NUGT a bit. Not really clear at this point, so JNUG bulls are holding up really well as well. So the support here is 558, the low of Friday. Resistance is 720. Let's get that NUGT resistance. That is up at 926. And the weekly chart for JNUG also looking similar with the exponential resistance. We're not above it yet. That level is 673. But same scenario with the bull TCG cross, the bull MACD cross, looking for those to occur. But as of right now, still favoring these bull miners. And like I said, that's pretty much the ideal scenario for what the bulls could have hoped for to start 2017. We did get a nice higher high on the daily chart. This 10-day moving average. Bear with me while I put this in real quick just to see it's going to begin leveling out. And then it's going to begin ascending to change it to the 10-period. So here it is now ascending nice and rapidly after it's been descending for so long. We have yet to backtest this support, and it is currently at 1142.77. And we're going to keep our eye on that from here on out because that's an important level to hold. Bulls are looking to continue these higher lows and higher highs. We've got our sights set on 1180 as the next hurdle. If we can see a close above 1160, which we came very close to here, but have not turned 1160 into support just yet. The bulls still looking good on the daily time frame. Another close at the high of the day. Can't ask for much more than that. We'll see if we get that continuation into tomorrow. And let's look on that hourly time frame to see the level the bulls want to hold. Ideally, the low of the overnight trading session has been set here at 1156.63. Bulls would love to progress from here and head back up towards 1160 and where we saw the top, 1164.11. So congrats to the bulls. We'll see how much momentum we have. We can't lose sight that we are fighting the trend right now. The daily trend favors the bears on gold and these miners, but we're seeing more significant signs of a turnaround than we've seen at any point during this pullback. So I appreciate you watching. Happy New Year. We'll keep checking back in. Have a great night.